What's up, everybody? Tom here with another video. Well, it's another week and the market's worried about something different. This time, it's all about these yields. 10-year yields spiking and continuously going up, and that puts a dampener on, of course, growth stocks, or at least that's what they say it does. In today's video, we'll answer whether this is a big problem for the long term, and we'll also be talking about the key levels for the SP 500, Nasdaq, Bitcoin, Tesla, Apple, and more. It's going to be a great one, guys. Stay tuned. All right, well, here begins our market recap for the markets closed 27th of September 2021. And we're taking a look at the heat map here of the large companies in the S&P 500. You'll notice energy and gas continues its strength here. Oil continuing to break out and move up. And we had a great day for Tesla. We've been talking about this being bullish on the channel now for quite a few weeks, and it just goes from strength to strength to strength. Hitting a key resistance we'll be taking a look at later. We also have Microsoft, Apple, Google, Facebook, and Amazon, all these FANG-style stocks. They were down or at least sideways. And the reason why is, of course, those 10-year yields. So when we take a look at the actual market indices, what you'll notice here was IWM, the small caps did quite well, 1.52%. A lot of financials in there doing all right. And then we had here the Dow Jones flat as a tack, S&P 500 and Nasdaq showing that weakness, but still recovering slightly from the initial sell-off. It's all about spikes on the 10-year yield. If the 10-year yield spikes heavily and goes up quickly, when that happens, it creates a shock effect in the Nasdaq. And what we saw last time back in March was we saw the Nasdaq actually weaken off when the yields were going up, and the S&P 500 relatively stayed very, very solid. Will we see it again? We'll be trying to answer that today. Let's take a look at XLE, 3.56%. Financials up, again, yields really pushing through, and the bad stocks in the market in terms of the sectors were real estate, healthcare, utilities, the normal kind of more defensive sectors. If we take a look now at the technical analysis, we'll bring up the PCC. This is the put-call ratio. Puts actually dropped, so we had a overall kind of bullish day on the calls, and we're taking a look at the call walls in a minute. But yeah, back down to the 0.82. Remember, we just use this as a bit of an oscillator. If there's less puts in the market, there's more chance that the market can fall. If there's a higher amount of puts in the market, less chance that it will fall. Remember, it's the opposite of what you might conventionally think. Let's take a look at the SPY. So this is the S&P 500, obviously ETF that a lot of people trade around the world. We get a long leg doji, so an indecision style candle in between our two moving averages, the 50 exponential moving average and the 20 exponential moving average. While we're trapped in this zone, we really can start to look at scalps and intraday trades on the S&P 500. We'll take a look at that right now, and we'll just talk about the sections here that are important. If we think about the real S&P 500, as in the SPX, 4490 is the key resistance that if it does hit, we do expect selling to occur. And the reason why is there's a lot of calls around that strike on the options. We also have that real trap coming in through here, and as we mentioned, the little doji style candle, which is showing indecision at the peak. If we scroll into the smaller time frames, we go down to something like a 1 hour, and we think about where's the support, where's the resistance. It's pretty clear we have a support line across the 44.30, 33 area. We are currently just slightly weakening here in the market, series of lower peaks coming through. And if we close below 44.33, we most likely then move to the next level. And where's that? Just under 4,400. It's pretty easy trading from the action of if you get below support, you move towards the next level. If you get above resistance, you move towards the next level. These are the two zones that we'll be looking at over the next 24 hours. But let's talk about options. Let's talk about the call walls and what we like to do. If you're interested in this data, you can get a free 7-day trial over at fxevolution.com. Links in the comments description down below. And realistically, what you're looking for here is a huge buying amount or a huge selling amount of puts. So basically we want to find out where are the key strikes that we should be looking at, and then using our technical analysis to come together with it. So 450 is always a very common strike recently. That's 450 on the SPY. This one here is a pretty big level, and I don't expect this week to be able to get above that zone. It's mostly because we're seeing it rise. So that means that there is a lot of people going bullish here on the market, and that's a bit of a call wall. We also have another call wall sitting around here, and it looks like it's around that 440. So even 440, if you were thinking about what Wall Street would like to do right now based on this chart alone, is if they could close it in this zone here at the end of this week on the 1st of October on the Friday close, this would be where they make maximum amount of money. So basically it's what we call maximum pain. If they can get it right in that zone, they're sitting there licking their lips and obviously eating the crayfish lunches and dinner, because that's the perfect level for them to be in. Is it a fully, every time it happens this way? No, but it is always great to know where the calls are and then look at your technical analysis and bring it together. When we push out to the 15th, so the most important expiry for October, that's the third one, the third week in every month is always the most important expiry. We have 450 again being a very key level that we're looking at. Huge amounts of calls here. Puts are starting to rise a little bit, but overall, it's very unlikely that the market will want to be above there by the midpoint of October. It kind of gives us that, while the market could go up, anything's possible, it does give us that little bit of maybe it's going to stay below this zone for a little bit longer and chop or go down a little. Let's move over to Tesla, because you guys should be excited about this one. Tesla, phenomenal movement. It's continued from strength to strength to strength. I'm sure a few of you in the comment section down below are pretty happy about this. I'll be interested. I asked the live stream about this in the comment section. Where do you think Tesla will be by the end of this year? So that's the end of 2021 calendar year. If you think it's going to be 400 like Barry, let us know. If you think it's going to be 1200 or 1500 or even more, let us know. I'm interested to see what the community thinks on this. Strong move. Hits $800, sells off slightly. We have some key kind of resistance equals support lines now. So we've got this previous 780 level. We obviously have the 762 is a great support. We've got a great trend line in the future if it ever did come back down. And overall, 800 is expected to be a big issue this week for it. And that's because when we take a look at, again, the put call ratios here, we look at where the puts are, where the calls are. 800 starting to rise. We expect a lot of retail to be buying this one. And in comparison, it's very low compared to the amount of puts. I actually don't know who this is, but this person's either big brain and bigger brain than us in the community or insane, because they have a huge amount of puts out for expiry this week. And I would think the market will not want to be down there. It's part of the reason why I think the market's going bullish. A lot of people have been placing bearish bets on Tesla. And if we go back through history, that never worked out for them so far. When people have been placing huge amounts of puts, it's generally continued up. The price action's up, yet the options are down. That's kind of a recipe for success, because what's happening is every time it's going up, the market is pushing through, the market is looking bullish, and everybody's going against it, which plays into, again, the option sellers' hands. They're looking at expiring that thing worthless. Let's go over to Apple. Apple here, a little bit of weakness in the morning. Decent follow through, big nice pickup at the end. And this is one of the markets or one of the stocks that you want to be very closely paying attention to. We now have the makings of the beginning of a lightning bolt. Basically, we have our previous resistance around 147.50. This is a zone where if you close above here, I think that Apple pushes to 150, 151, and then possibly pushes higher. We also have a rejection here. So if we get that follow through action, some people will look to scale in off this bullish rejection. So if the day ends up being bullish, the market starts to rotate back into Apple and it goes above this rejection candle here, this hammer pin bar candle, you start to see that flow through of money. It's certainly something that I'll be looking at. You close below this candle, back down to 141 we go. And if we get under that support, of course, we've got our massive trend line that we're looking for. That would be fantastic, actually, if this trend line got hit. Some of you wouldn't like it, but overall, what a great pickup zone for many investors. Fantastic level so far, and we've been following that for quite some time. Apple, few ways to trade it, few ways to look at it. Hopefully you guys can look at it and see and bring that together with some of your ideas. IWM, Russell 2000. Here we have a breakout above the 225 important zone. Nice strength there yesterday. 225 basically now becomes support. Previous resistance over here and resistance here. If the market comes down a little bit, maybe hits the 20 moving average, meets that with it, this red line here, and then we start to see bullish strength into 230. So the IWM is not playing bearish here. This is playing bullish. The market itself is looking much stronger than you would think. I mean, that's a good closure above and certainly a key level to be watching now, 225 for the next session. Let's move over to what most people are concerned about, and that's the US 10-year. Inflation, 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 as they say. Michael Burry's been talking about it for a while. Obviously, he's had those bullish longs on inflation. I've spoken about this quite a few times, and I think we correctly analyzed it back in March when it really tanked the Nasdaq. Remember, look at what happened in the past. So the Nasdaq weakened here, and then as the 10-year came down, what we saw was the Nasdaq strengthened and went from strength to strength to strength. Even if this market had continued to go up, let's say it hit 2%, which I think is a very critical level here for the US 10-year. I don't believe that the Nasdaq will actually be heavily negative based on a 2% reading. It initially might get shocked, but I don't think there's been a correlation, strong correlation between the big Nasdaq stocks and weakness with the 10-year. And I've shown that in previous videos. I've never seen a correlation that's strong enough to hold up over time. You can go back and have a look at previous spikes and you won't find it correlating with tech weakness over a longer period. So if you're an investor, I don't think it's a concern. That being said, if it goes past 2 and goes crazy and goes to 4%, of course, then we're talking a different story. But up until that point, I don't think so. 1.49, we've got a bit of a resistance here at around this 1.55 kind of zone. You'll notice the previous support resistance. It is spiking. It's through our downward trend line. Even if this weakens, I think this is clearly showing that the 10-year is ready to start bulling for a little while. I would not be surprised if we hit a 1.7 or a 1.8 over the next 3 to 4 weeks. Something like that could very much be on the cards based on this breakout. And it's certainly a chart we will continue to watch. The faster this moves during the session, the more likely a bit of a shock will come through on the Nasdaq. And speaking of the Nasdaq, let's take a look at where it actually closed. So previous resistance is become support here on the QQQ. We have a great resistance level, the 374 previous support. What a fantastic zone. If you're looking at bull buys, that would be a fantastic level. 374 into 378.50. What a zone. Great. I'll be watching that. We also know that this is a huge close point. So it actually came up and did what we wanted it to do. It closed above the previous resistance and acted as support. Another strong bullish sign here in the markets. We have now some great levels to be looking at. We get follow through on this pin bar, on this bullish hammer rejection. Where do we move? 20 moving average, this 373.88 resistance, 374. We get underneath this and close. Where's the next stop, guys? I'm sure a lot of bears will be excited because if we close underneath that zone, statistically likely we move down to the 360, which will be equal to 14,800 on the Nasdaq. If we go and have a look at the calls and puts for the week ahead, you'll notice there's a whole bunch of strikes. We're getting a bit of a put wall here around where the current price is. So we are getting a huge amount of puts opened in comparison to the SPY on the QQQ. And if we look ahead, October is all over the place. There's calls, there's puts, it's convoluted. I guess you would think that maybe like a 360 would be like the perfect zone for Wall Street to close in October based on this. But yeah, lots and lots of put walls sitting around that 350, 360. You can see all those red lines there coming through. It's a constantly evolving situation. When we take a look at the Nasdaq, it's the same thing, just of course with the different numbers that a lot of you are used to. 14.8 remains one of the key supports. We've got a great resistance at 15,380. This is a zone that if it breaks and closes above, I believe we've got a great day trade there and then even more potential. And I want to talk about the bigger picture. So if this market did close underneath 14.8, next stop, 14.5. Stop after that, probably around 14.1. Previous resistance, and more importantly, the bottom of our amazing trend line here, our amazing ascending channel. This ascending channel has been rock solid. It's picked plenty of different tops, e.g. the top over here that we've been talking about on the channel now for a while. And we have a fantastic price here because what would happen is, let's say this did bounce, not only is there a lot of upside there in the future, but you also have a great take profit target for that swing-based multi-month style trade if that's what you're looking at. There's some good stuff going on here in the Nasdaq market right now. Let's move over to the crypto markets. So things in the crypto markets have been strange, to say the least. We've had pullbacks, we've had pickups, we've seen levels be broken and then completely rejected. I think Ethereum and also Bitcoin are in a bit of a struggle zone right now. from the daily perspective, you would look at this and go, okay, this looks like a very bullish zone of demand. We've got a huge amount of people looking to buy and accumulate positions around that 2,800 on Ethereum. That's a strong buy level. Now, in terms of resistance, this 3,200 is becoming the biggest issue for Ethereum. And we notice here the 20 and the 50 exponential moving average, the red and the blue lines, are exactly on that level right now. We rejected it yesterday, so we rejected it in the last session. But if we move through and we close above this, think about this. It's a massive double bottom, which projects perfectly to 3,600. And that's got to be a very, very bullish signal if we close through there. I really like that setup. We also have kind of like a double bottom within a double bottom. So we had the lows here. We had the resistance breakout. And if you got this one on the weekend, you did quite well. Take profit there. And we're back now on the previous resistance becomes support. So this is where Ethereum and Bitcoin need to hold up. They're the exact same chart. They're very, very similar. Ethereum slightly more bullish in the price action, but you'll notice on this Bitcoin chart, it's exactly the same concept. The only difference is Ethereum got all the way to the 20 and the 50, which is 45K effective on Bitcoin, whereas Bitcoin, due to the China news, the FUD, that type of stuff, couldn't quite get there. So I'd say the Ethereum chart looks stronger than the Bitcoin chart at this stage, but both are waiting for that confirmation and both are on their 2-hour double bottom back tests. And you'll notice again, Bitcoin a little bit weaker than the Ethereum chart overall. I wish everybody the best this week. If you enjoyed the video, please make sure to, of course, hit that sub button, hit the like button, and we'll see you in the next video. Let us know Tesla. What do you guys think by the end of the calendar year? I'm interested to know your opinions. Bye for now.